Hello and welcome to Indian Open right here on BloombergQuint Live. It's an action-packed day and we'll try and make it an action-packed show. Frankly, lots of news flow to digest. I'll very quickly summarize what's happened across the world. Get in Peter Cardio to talk about his thoughts on what the Fed said and not just the GDP numbers. Frankly, they were well known. And what could the globe look like? So that will be a quick perspective there. And then we'll of course talk about a bunch of newsmakers in India today. There are lots of stocks that we have to digest in the half an hour that we have before markets start. So let's very quickly get started. First, what the US markets are doing. The US markets did very well. The US markets ended well. Europe was doing okay too yesterday. Asia started off on a positive note, and the SGX Nifty is pointing towards a robust start in the session today. So we have an action-packed morning or open lined up as is. The point for any trader would be, if you have existing trades, then it's fine. But if you don't have existing trades, then do you have the chance to go long once the markets open up? That's the question I think that we'll try and ask our technical experts too in the session today. The other thing is, watch out. Just from a trade perspective, keep in mind that we're putting behind 3 days of a very strong rally already, and we might have a very big start today. So we'll have 4 strong days, about 600, 650 points or whatever you call it on the Nifty, and the Nifty Bank has put in so much. Could that be stretched, and could we see some profit booking after a bit of a peak? That is something that we all got to keep in mind. 3 numbers coming out today later on the index. One HUL during market hours latter half, and then Reliance and Tech Mahindra post market hours. They'll not necessarily be the best, so you have to keep that at the back of your mind. Okay, we'll have Peter Cardio in just moments from now to talk about the impact on the US GDP, and then we'll start talking all about our own markets as well. Keep in mind, as I said in the trade setup as well, that while we look, and my producers will alert me once Peter Cardio is with us, but meanwhile, just want to alert you to one thing, Uran, that the markets will start off well. We will have Reliance and HUL numbers to contend with during the second half of the day. And there are lots of news flows surrounding us on banks, with that Economic Times report about RBI reconsidering the promoter cap and therefore what it does to Kotak Bank, IndusInd Bank, Bandhan Bank. Tata Motors ADR did really well because they are going to restart multiple ops in China, and therefore Tata Motors as a baseline stock could actually do very well. So that is the other one. And watch out for the auto ancillaries, because they had a fabulous move in the last 24 hours. In yesterday's session, all auto anchs were up and active. Very interesting to see if some of the auto anchs are active in the session today, and a clutch of brokerage notes which are very bullish as well. So 3 or 4 very interesting pieces that we should try and answer. Okay, let's figure out if Peter Cardillo is with us. Okay, we'll get him. Then we should try and get some of our other guests as well going, and because the globe is kind of half known, it was interesting to get Peter's view. But if Peter's not there, we should try and get some of our other guests going, or get in Soumit Sarkar or any one of my colleagues to talk about the key stocks in news, because that's the other big thing in the session to remind you. As important as the globe is, it is also very, very crucial to monitor what is happening in our market, simply because there are a bunch of stocks which are very, very important in the session today. Okay, let's first get in, since we have Agam Vakil with us, let's get in Agam Vakil to talk about what the important part also, which is the results that are going to come out and what should be done there. So we'll first get in Agam now, then we'll get in Soumit to talk about Reliance, and then we'll move on to the other stocks in news. Start off with Agam on HUL. Agam, can HUL disappoint?
Good morning, Neeraj. Well, this is the first time we're seeing very, very varied numbers on Hindustan Unilever, and I'll come to that. Right, let me begin with your expectations on the earnings. So we are expecting revenues to remain largely flattish, see a marginal 1.6% up move. EBITDA margins expected to stay largely stable at around 25.5% against 23.3%, and net profit will rise 18.5% quarter on quarter. Now, in terms of the volumes expectations, and across all brokerages, they are expecting anywhere between a negative 4% volumes growth to a positive 4% volumes growth. So numbers are all over the place. There is slowdown in rural significantly, and specifically the last couple of weeks of March was something that will weigh down on rural and urban sales. The pricing to a certain extent is expected to remain stable, but we may see some changes. In terms of your products and categories, something that its parent Unilever has already mentioned, that the company will see weakness in skin care and hair care. On the other hand, that could be countered by strength in soaps. considering the kind of upmove that we have seen and the stocking by many households. So that is something that will come into mind. But on the whole, we're expecting a relatively muted quarter for Hindustan Unilever. Volumes number will be the most important number to watch.
Agam, so what is that number? What is that number that will make it a good result or a bad result?
From all the brokerage reports that I've seen, Neeraj, everyone will be watching out for the volumes growth. And if the volumes growth is between a positive 2% to 4%, that will of course mean that it's been a very strong quarter for Hindustan Unilever as against expectations.
Okay, as against expectations. And Agam, just one quick follow-up. Aside of that volume growth number, is there anything else that you would keenly watch out for, or is the volume growth number the be-all and end-all for this quarter?
Oh, no, sure. I am absolutely going to be watching out for commentary on the rural growth and what the management expects going forward, because that is going to be key. Besides that, urban areas as well. We must remember that because of the fact that urban areas have higher density, the lockdown and the pull off of that will have a higher impact on sales. So it's going to be a combination of the rural and urban commentary, and that will of course be another key factor to see how the first quarter will pan out and eventually the second quarter for HUL.
Thanks a lot for that, Agam. So that's HUL. Now we've spoken about HUL. The other key one to monitor today is Reliance Industries for results and more than results as well. So Amit Sarkar Johnson with that. So Amit, quick perspective. What are the numbers that we should watch out for?
For the standalone business, if you see the revenue now, that is expected to be down by nearly 12%. EBITDA is expected to be lower by 16.5%. Margins are expected to come in tad lower at 40.1%, while the net profit of the company is expected to fall nearly 24% compared to last quarter to close to 7,300 crore rupees. The gross refining margin, that's the key number for the standalone business, that is expected to be lower by 20% to close to $7.4 per barrel. Now, the 24% drop in the net profit will be the steepest in the last 12 years. Now, the standalone earnings will be hit by a weaker refining and petrochemical earnings. Singapore gross refining margin, now that averaged around $1.2 per barrel, and that's the reason Reliance Industries gross refining margins are also coming in low, in fact lowest in the last 21 quarters. Now this lower gross refining margins and lower volumes, along with this and inventory loss due to a sharp drop in crude prices, would keep the refining business of the company weak in this quarter. Now the petrochemical business, that is also expected to be under pressure due to lower volumes due to a weak demand in the global market. However, some improvement in the petrochemical product spreads would partly make up for this lower volumes. Now this weak refining and petrochemical business would be offset by higher contribution coming in from the Geo business, and that's the reason the consolidated net profit is expected to be lower by only 10%. Of the retail business, that would see some impact on account of the nationwide lockdown, which should have impacted the sales in the last week of March for that segment. Now the retail EBIT is largely expected to remain steady compared to last quarter and only a tad below compared to last quarter, and that is because higher grocery sales will offset the impact of lockdown on other segments.
So I mean, what about Geo?
Now for Geo, if you see, the revenues are expected to be high by 10%, EBITDA is expected to be high by 16%, margins are expected to come in higher at 42% compared to last quarter at close to 1,900 crore rupees. Now the average revenue per user is the key.
I think we are facing a bit of an issue with Somit's piece. So let's just but we've gotten a sense about the oil and gas business at least. So that is part one. Of course, the other thing is about Geo and Reliance and what would those numbers look like. So Amit, very quickly, 30 seconds. You want to finish what Geo should watch out for?
For Geo, you should watch out for the ARPU number, which is expected to be 5.5% higher to close to 135 rupees. EBITDA is expected to see a jump of 16% on the back of tariff hike done in December 2019, higher usage and subscriber addition. The subscriber base is expected to increase by nearly 1.6 crore for Reliance Geo. And if you see why all the benefits are of this tariff hike, which was done in December 2019, is expected to come in now, is because the validity of customers are ending in January 2020. Along with that.
Okay. Sumit, no, I mean, this is the nutshell that we wanted. Sumit, the link is a bit patchy, but we've gotten what we wanted. So thank you so much for that. The ARPU number is 135 for Geo. And Reliance Industries in focus will come out post-market hours for HUL. Volume growth 2 to 4% might be considered good. Anything below that might be bad. Samir Kalra joins in with his thoughts, and then we'll get in Aditya Agarwala for the technicals as well. But Samir, to start off with you, HUL. Samir, the expectation largely is after Unilever's comments that HUL may not be the best set of numbers. There's this overhang of GSK shares coming in as well as supply, but the markets will start off well. What should one do with HUL?
So I think, Neeraj, right now the valuations and the premium, if I see even let's say a 20% hit in June and March quarter together, it's still around, let's say, 45% of the average 5-year PE. So I think HUL should be avoided if any fresh buying, and if you hold, I think some kind of a profit should be booked right now, even for a long-term investor, because two things will come out. One is March quarter might not be that highly impacted on the volumes because still there was, inventory in stock with the company and was pushed to distributors. So eventually volume might not come off, but a commentary of, let's say, what's happening currently, that might disappoint a lot of investors. And going forward, there will be a lot of uncertainties because distribution opening is very important for HUL to push through volume growth right now. So they might be even working at 50 to 55% of capacity utilization, but the distributions, if they're closed and they're not able to push through that kind of a volume right now, at these kind of valuations, the disappointment becomes bigger, especially when there's a large block to be traded, which might get absorbed, given that staples are being attracted a lot of flows recently due to uncertainty ahead. So I think that block wouldn't be that kind of a headache, but at least from my side, the guidance from here on might be much weaker than what the investor sentiment expects it to do.
Okay. The other question is on Reliance Industries. The results are expected to be weak, but the strong is in an uptrend, Samir Kalra. Let's assume that the results are going to be weak. Would you, if you had Reliance in your portfolio, get out of it? Conversely, if you didn't have, irrespective of the results, would you be a buyer?
So, Neeraj, for me, except if I see staples and pharma, other sectors, especially these kind of results, especially Reliance, gives me the opportunity to lower my weightage in them or exit to a certain extent. Because if you see, we are looking towards June quarter now, right? Everyone is trying to get the guidance of June quarter rather than seeing what March impact is there. And refinery output is like at least 40 to 45% down. The Aramco deal is still in overhang. Though the Facebook deal happened and that will garner around $6 billion, the net debt will be still higher. So the net debt number will be important in this result. And what kind of cash flow generation they expect in the next 6 to 9 months. Because ARPU being at 125, 126 also will not help the cash flow increase. It's mainly the refinery business which supports the cash flow in the system by 65%. So if that drains out in a big time, so next 6 months, you will see a larger impact of that on the valuations. So I think it's, even if it goes $100 up from here, it'll be better strategy to exit rather than putting up a fresh money even on, better than estimated results of March.
Okay, we'll get in one of my colleagues, Nikki, I think, to talk about the key stocks in news as well in just moments from now, because there are a bunch of them which are in focus. I just want to get in Aditya Agarwala for a quick perspective on what to do with the financials, since that can well determine what the markets do today going ahead as well. Aditya, good having you. We will start off higher today. There are some individual news flow as well, which we will talk about with Samir, but financials at large, Aditya, Bank Nifty or NDFCs, they'll start off higher today. Do you foresee more upsides, or now would you look at booking profits here?
Good morning, Neeraj, and thanks so much for having me on the show. So yes, we are opening with a bang, probably 190 point, about 200 point higher as indicated by the SGX on the Nifty. But after this will be the fourth straight session of gains, Neeraj, and we'll be approaching the upper end of the wedge. So it will be very important for the market participants to watch whether we trade above the upper end of the wedge, it's a rising wedge, whether we trade above the upper end of the rising wedge, or we actually just open at the upper end of the rising wedge, and then we see profit booking in the second half of the trading session. So the upper end of the wedge is placed somewhere between 96.80 to about 9700 on the upside, Neeraj. So traders should watch out those levels very minutely, and the SGX Nifty is pointing towards an opening towards 9700 for our markets. So for as far as Nifty is concerned, I would not go out and buy at the opening of 190 200 point gap up opening because I would closely watch if Nifty sustains above 9700, then probably there's a case for a long trade, and then the targets would be somewhere around 9780 to about 9800 on the upside. Now, traders will watch out for the 50% retracement on the upside of the entire downfall from 12,400 to about 7,500, which is around 98.90 mark. So my sense is market might just pull back to those levels provided it sustains above 9,700. So 9,700 for me now acts as a very important resistance as far as the Nifty is concerned. On the flip side, Bank Nifty actually has broken out from a triangle pattern in trade yesterday on close. So there is more upside to Bank Nifty. My sense is the financials might take a lead now in the run-up. If we see Nifty sustaining above 9,700, then the financials are the ones which will take the lead. And probably one can look to go ahead and buy Bank Nifty if it sustains above 21,100. Then there's a case of a buy in the Bank Nifty for a target of 22,400 to about 23,000 on the upside, which happens to be the 50 DMA needed. So my sense is Bank Nifty should outperform from now onwards, considering that it has underperformed.
Okay. Samit Chavan is also with us. Samit, what's your sense? It's expiry as well today. We will open higher. What does one do then, Nifty or Nifty Bank?
Morning, Neeraj. We have been quite bullish. Not now, after yesterday's, good move beyond 9,400, 9,500. But since last 1.5 weeks, we have been quite bullish. Ever since, we have been testing that important level of 9,800. And we were of the fact that if, breakout from this consolidation had to happen, it has to happen in the upward direction. Considering the overall participation from the, underperforming private banking names, some of the auto stocks did well. And we have seen a good broad-based buying in last 1.5 weeks. So we were quite bullish, and we anticipated this breakout to happen beyond 9,400 if you refer to our last week report also. But now Nifty has broken out from that important level of 9,400, and the kind of activity that we saw yesterday in last couple of hours of trade, all in the money strike, if you see in call options. They were clearly, unwinding their positions. Put writers, they were around 9,200, 9,300. They have shifted their base higher toward 9,500. And the kind of, gap up opening that we'll see today itself, probably we might see mild profit booking, but we believe that probably next couple of days, probably in the next half, next week, we would see Nifty heading towards 10,000, 10,200. So we are a bit, and we would advise those traders who have already bought it, they should certainly stay long, and in case of minor dip today itself, that would be a good buying spot.
Okay, gentlemen, we will talk at about 9:15 about where is it that fresh longs can be created post such a high open as well. But as I said, we'll juxtaposing fundamentals and technicals, and amidst all of this, big stocks in news, because there are a clutch of them that are very, very important. Nikki Johnson with a quick snapshot of the top news makers that you should watch out for, or the top stocks which could react today. Nikki.
Thanks, Neeraj. I'm going to start off with private sector banks, especially that of Bandhan Bank and IndianOpen Bank. They're expected to be in focus. RBI may allow for promoters to hold more than 15% stake, which is an ET article expected to benefit both entire private banking space, but more so for Bandhan and IndianOpen. Higher taxes on liquor, where Rajasthan has hiked the taxes to 45%, in effect to which you have some kind of negative development for United Spirits and United Breweries. It's a small percent in Rajasthan out there, but then the fear is that the other states too might follow suit, and in turn would lead to an impact on the sales of these companies. Tata Motors, that's going to be, that's one counter that again is expected to be in live today. JLR has restored 3/4 of its production in China. It's positive development coming in, given that the production is backed by the demand that is seen in the market. We're also expecting Hindalco to react positively in trade today. Consortium clients are similar to that of Novelis, which is the downstream company to Hindalco. And Consortium has come ahead and posted good set of numbers for Q1. We're also seeing fundraising plans coming in for AUM, Small Finance Bank. Punjab and Sindh Bank to an extent of 500 crore. And also, you're going to be seeing Polycab, which is going to be meeting in on May 2 to discuss the fundraising proposal. Overall, this is expected to ensure liquidity position is sound for these companies and banks, and hence we are expecting some sort of positive reaction on back of that.
Okay, Nikki, thanks so much for putting that into perspective. Samir Kalra, come in on some of these newsmakers, and I want to start off with those auto names, and of course, then we'll take in the trading ideas from our experts too. But just a couple of these stocks in news. Samir, Tata Motors, the ADR was a bit of a giveaway. Operation starting. What does it mean for Tata Motors? What does it mean for maybe stocks like Motherson Sumi?
So I think Neeraj, there is a certain pickup in activity in China, and if I see the car sales of the retail, there has been a little bottomed form, let's say, at least in the short term, right? And from a 0 to 10% gives you a support. Now JLR production in China has reached around 70-75% levels in China factory. So that is a positive because that helps the operating cash flow in a certain way. But I'm still negative on autos globally. If you see, Nissan is shutting off a huge capacity in June and May as well. So I believe there is a more of a bounce from, the suppressed levels of 0 or 10% kind of a capacity utilization. But sales put through will be very difficult for even the retailers to go ahead and do it on a consistent basis. So I think on these kind of bounces, I'll get out of auto rather than, putting up for fresh money, because by September or October, I see another risk downside for them.
Okay, so that's the long-term view. Samit Chavan, do you sense a trade in a Tata Motors or a Motherson Sumi more importantly, because Tata Motors might start off with a big gap up?
Coincidentally, Neeraj, yesterday morning we had a buy call, a positional buy call in Tata Motors around 78.5, and we have a target of 85. So probably at the opening itself, the target would be met. But as far as Motherson Sumi is concerned, this stock has already given a good recovery in last couple of weeks. Last week we had seen some mild profit booking, but overall, if you see around 65, 70, this stock had formed strong beef, and from here on, stock is poised for testing its important levels of 9,800. So another 10 to 15% move from current level cannot be ruled out. So in case if this stock, Motherson Sumi opens with a gap of nearly 3-4%, still that would be a good buying call.
Okay, so if it opens with a gap of 3-4%, then it might be a good buy call. Okay, watch out for that. The other one is this Constellium news, and just wonder, Samir, how did you read into that? And does that give a chance to extend bullish views on a Hindalco for that matter?
So I think, if I see metals right now for March results, I don't see much impact on the negative side of it. So yeah, results will be better than estimated for metals. But the only point for now metals is if the global production really starts at 10 to 15% kind of a capacity utilization for next 3 months, then do metals really make the move? And Hindalco debt will be the major problem from my end. So I think cash flow constraints will put a very big impact on metals, and especially Hindalco, I still have a sell rating rather than having a buying or a neutral trade.
Okay. So let's talk about some specific trades now. Aditya, I'll come to you. What are your top 2 calls?
So I'll go in for a L&T. Neeraj, stock has been an underperformer. It's time stock might just start outperforming at current levels. Looks extremely attractive. One can go ahead and buy for a target of 910, 940, keeping a stop loss at 845 on the downside. The second name is a metal pack. Metals did show some strength in trade yesterday, and the index is looking like it will continue its uptrend. So Jindal Steel is one which stands out within the metal pack. One can look to buy for a target of 95, keeping a stop loss at 85 on the downside.
Okay. Samit Chavan, what about you? Your thoughts? Your calls, rather. Excuse me.
Even I have a one buy call in metal steel, so that would be Tata Steel, which has been consolidating of late. But yesterday we saw good traction, and the stock is now indicating that possibility it will break out from its higher end, which is around 290, 295. So we would go long in Tata Steel. We would expect a good move, probably 8 to 10% move in next 2 to 3 days. So we are bullish on Tata Steel for a target of say around 298 to 305. One can keep a stop loss around 274. And other buy call would be on Adani Ports, which has seen massive surge in last 1 hour of trade yesterday. It has managed to managed to break out from its recent hurdles of 283, 285. And if you look at the overall volume activity, it has risen substantially. And hence, we expect Adani to head higher. 300, 305 would be our target. Can be bought with a small stop loss somewhere around 278.
Okay, so that's a few names that you have to keep in mind. Yesterday, I thought a stock but looked very attractive based on the moves was ICICI Prudential. Samit Chavan, you want to come in with a quick thought here on ICICI Prudential? Gained a bit post results, then a bit of a pause, then again saw a bit of a rally yesterday. Can it do more?
Yes, certainly yes. The stock has broken out from its recent hurdle of 380. And possibly next target to watch out for would be around 430, 440, so which is a 200-day moving average. So at least a move towards the 430, 440 cannot be ruled out.
Okay, so watch out for ICICI Prudential as well in the session today. There are some very strong stocks. Deepak Nitrite was up about 4.5%, 5% in trade the other day. There's some strength in IGL the last couple of days, so do watch out for those as well. Samir, one quick thought, because this will be the talk of town today, and which is this possible. I mean, it's an ET report which speaks about the possibility of the RBI concerning, revising its ruling on promoter cap on banks. So IndusInd Bank, Bandhan Bank, maybe a Kotak Bank in focus. Did you have a chance to look at that piece of news? What do you make of it?
Yeah, so I had a look at that news, and it will be positive for, at least this round of issues to be resolved for a lot of private banks. Because if you see, a lot of private banks, promoters are interested in raising stakes, and because there will be a capital raising round for at least most of them, especially the ones where the stress is seen a lot, and IndusInd Bank will be one of them. So you might see a good amount of bounce on these kind of news, especially in Bandhan or IndusInd, or maybe IDFC first as well, because there might be a capital raise over there as well on a promoter level or non-promoter level. So I think over there, this will give a big relief to them, but this doesn't remove the overhang of the asset quality in the foreseeable future, which they see. And given what Axis has communicated to investors and what it has done on the financials, I see a lot of stress coming off. So it can be a good relief for them. And at least for special banks like Kotak, this might give a bigger relief, in the sense that even if further there has to be a capital raising, then maybe the promoter is willing to, raise to a certain extent more, if not reduce it.
Okay. Well, we have less than a minute left. I would urge viewers to keep in mind this RBI relaxation for promoter holding norms could be interesting. By the way, Asia has started off well. SGX Nifty points towards a good start, and we are underway for the pre-open session. The Nifty, maybe not 2.5%, but certainly not just the 1% of the Sensex either. So we'll have a start somewhere in between, I reckon. But it promises to be a good start. Watch out for the Nifty Bank. I think that will be a big determinant as well. But let's spot. I think it's fun to spot today simply because some of these stocks might be active. IndusInd Bank shows a 10% pop on open. This ET report clearly getting it excited. I would watch out for Kotak Bank as well as Bandhan Bank as well. Bandhan in particular. So IndusInd and Bandhan should be the ones to monitor. Tata Motors, that big move, and this might not be it. By the way, the ADR was a bit of a giveaway. So Tata Motors will be a big index stock to watch out for in the session. HDFC Bank is above 1,000. At 800, there were no buyers. At 1,000 now, people are buying it in what is arguably a bounce in a bear market. That's the vagaries of the market. Reliance Industries ahead of the results looks like starting off well, but let's wait and watch. Let's give these rates a chance to stabilize. We might not have a single stock in the red today. That might be the nature of the start that we will have. What about some stocks in focus today? I think that is also important. We don't want to mark too many stocks in the pre-open session, but yeah, do watch out for Bajaj Finance. do watch out for ICICI Prudential. I dare say do watch out for Motherson Sumi. That looks like starting off well too. And UPL has got a bunch of brokerage notes, so that's the other one that you need to monitor. But be careful, viewers. Professional traders like Samit can digest a fall of 100, 200, 250 points very easily if a positional call is higher. Be careful if you're buying today on open after the bit of a gap up. We have results to contend with later on in the day as well, which could be a bit of a tricky situation. Remember, we are off tomorrow. The world markets are not. So you have to bear that in mind. But let's get straight to business. Talk about all the key newsmakers. And now that we have some rates to work with, what could be the case into some of those. Now, here's the question. We're seeing IT looking rather strong selectively. Everybody fundamentally saying we should go out and buy. Samir Kalra, I want to ask you about HCL Technologies. And the reason I ask this is because of the price movement that we've seen there. It's above 500. It's gained quite substantially in the last 1 month, in the last 7 days. Fundamentally, it's a stock. Is it a stock that you would own?
So, Neeraj, if you see IT, everyone is bunking on the March results, right? And they have come out better than what everyone estimates, especially on the margins as well. So I think over here, what is happening, there's a distinction between what people are expecting and what the company is even commenting or, giving a guidance and removing the full year guidance of FY 2021 as well. So for me, there will be a huge pricing cut in their contracts. There will be delay in execution. The cash flows will take a knock. And that's the worst thing which can happen for an IT company because they're based on the cash flow generation. So if the balance sheet stress for this sector for next 6 months, I would take an exit from the sector on these kind of bounces. And, when the commentary from the company is very bleak, but everyone is still against it and trying to anticipate a full V-shaped recovery in the sector, which will be not the case over here because the global banks and the US BFSI execution will be very slow in the next 6 to 9 months. So I don't see that kind of an impact happening over here.
Okay. Well, there is some more news flow. Lupin is saying that the Pithampur unit has received an EIR from the US FDA with 2 observations. I don't quite know what to make of it. Glenmark has gotten an approval. So pharma is also certainly in focus today. But the other newsmakers are probably much bigger right now than pharma. There is some gains that we're seeing in insurance, some gains that we're seeing in specialty chemicals yet again. Nothing too extraordinary, but financials probably rule the roost. Samir Kalra, any bank that you would look to buy today?
So any bank I would like to buy at these kind of evaluations, see, I am interested in looking at Axis Bank. But again, I would give it a couple of months before it becomes much more clearer and what kind of hit everyone is going to take. So for me, on the watch list is Axis Bank, Kotak Mahindra, HDFC Bank is there on the watch list. So these banks will be still in flavor, and IDFC First is one of the lower end banks where I see there will be a potential outcome of it. But yeah, it might take at least 6 months to play out properly.
Mind you, I think there's a note today, if I'm not wrong, from Morgan Stanley, which says that their target on IDFC First Bank is close to 15 rupees. So there could be a near-term pressure. There could be medium-term recovery, as Samir is saying. Let's wait and watch what happens. What about, it may not be a day to look at small caps, to be honest. I'm kind of refraining from that because the activity might be centered around some of the larger names since the index, the Nifty Bank, etc., are all looking like starting off well. Strides Pharma is looking like starting off very well after that 20% up move yesterday, another 17-18%. Aditya, I know these stocks are difficult to catch because in such a sharp up move, you don't quite necessarily have a trending chart. But any thoughts here on targets, possible targets here?
So the move yesterday was backed on extremely healthy volumes, Neeraj, without a doubt. And it has been an underperformer for quite some time. So the up move can continue to levels of probably 500 to 540 also on the upside. But I'll be very watchful if So the stop loss has to be a little deep, somewhere around 440, and traders should watch where the stock actually opens. If it opens somewhere around 500 odd levels, then it makes no sense in going long because the targets and the stop loss ratio will not be in favor of going in a long trade. But overall, the trend looks like it will continue. If there is a dip, then to levels close to about 450 to about 440, definitely makes a buy.
Glenmark is the other one which is starting off well. They've gotten some approval, and as a result of which this stock is pretty interesting. So do watch out for that one. A couple of quick calls. Okay, 6 minutes done. Motherson Sumi is looking like starting off 5.5% higher. M&M Financial looks like starting off well. RBL Bank is at 130. Just look at the kind of moves that RBL Bank is doing as well. So some of these stocks are looking very, very interesting in the session today. What about HUL? That is the other one which is in focus. And for all the key reasons, it looks like starting off with a bit of a bang. About a couple of percentage points higher at 2274. Was very weak yesterday. Samit Chavan, if HUL has a bounce today, would you look to sell it, or would you not risk it because of the market situation?
I think for a time being, this stock would consolidate. It has already seen good spike from lower levels, so it's time for this particular stock to take a backstep. It might not correct much, but we would see some consolidation, wherein the range would be 2350, 2400 on the higher side, and 2150, 2100 on the lower side. So probably this stock would oscillate within the range of 2400 on the higher side and lower side 2100, 2150. With a positional perspective, around 2100, 2050, I would look to buy it.
No, but you wouldn't go short on it, is it? It looks like
Yes, I would avoid going short on the stock.
That's what I wanted to actually get, because there's this news flow around these shares coming in from GSK, additional supply, and therefore do they weigh in on HUL in a scenario like this? Mind you, the results are also today, and therefore it will be a key stock to monitor. Can the results disappoint HUL big time? That's the other thing that everybody would be watching out for in the session. So 8 minutes are almost done. Yeah, in fact, they are done. We likely will not have a single stock in the red on open, and that's the key thing. Now, let's talk about some of these specific movers. Viewers, as I said, we'll ask our experts whether some of these stocks give you a chance to go long at the current prices. Aditya, Ambuja Cements. Credit Suisse note says Ambuja, ACC, and Larsen & Toubro are amongst the key buys for them. Ambuja 171. Can it do more? Would you go long?
I would prefer ACC as compared to Ambuja, Neeraj. So Ambuja and ACC both are similar looking charts, but ACC is slightly better off. It has come close to its support of 1050 to about 1100 on the downside. Somebody can look to go long here for a target of about 1250 to about 1300 on the upside with a stop loss at 1050. Ambuja on the flip side, I would wait slightly for it to fall back close to about 160 to about 155 on the downside. Those will be good levels to go long on Ambuja.
Okay. Tech Mahindra ahead of the numbers. Samit Chavan, IT is looking strong. What about Tech M?
See, I guess when other sectors are doing well, sensitive sectors, we would avoid going long in IT and FMCG at current levels. So we would expect consolidation, as I said, for HL also. So we would avoid IT and FMCG space for a while.
Okay, quick follow up then, Samit. UPL, multiple brokerages have come out with a long call on this one today. Targets are higher. It's a stock that at times moves very, very fast, as the last few days have shown. Would you consider this for a long trade?
It looks encouraging. It would be on our watch list, but we would wait for some kind of levels to get broken. So if I have to say any particular level in UPL, 372, 374, this is the kind of resistance zone. So if this particular stock moves beyond that level, sustains about that, then yes, it would then trigger a good rally, probably towards 398, 400.
Okay. Well, stay on, gentlemen. We are minutes away from market open. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, Reliance Industries, Hindustan Unilever, and Tech Mahindra will be the three nifty companies that will come out with the results today. Jaguar Land Rover has restored 3/4 of its budgeted production in China, reports Bloomberg News. AU Small Finance Bank to consider raising funds via share issue on 2nd of May. On the same day, Polycab board will take up a proposal to invest in or acquire shares of the company. Punjab and Sindh Bank Board to seek shareholders not to raise 500 crore via QIP on the 5th of May. The Reserve Bank of India is considering to raise the promoter holding in private banks over the current 15% cap. And lastly, HSBC and Jefferies maintain a buy on UPL on the company's strong moat and well-diversified business model. As I was saying, UPL could well be a stock that you should monitor in the session today. Banks would be the other ones that you have to monitor in the session today. And of course, Finance and FinServe, very strong moves the last few days. Do watch out for them. Samir Kalra, yesterday was a day full of news for Bajaj Finance, some wrong rumors being spread about as well. They have managed to raise those monies. It wasn't a big problem for them. The stock has bounced back from those recent lows quite convincingly. Would you be a buyer here?
Neeraj, I would be a seller here. These kind of situations are unprecedented, and if you see, a lot of companies have now started communicating a deferment of April and May pay, though there is no job cuts, because again the job cuts are leading to complaints to ministry and then there's action taken over there. So everyone's waiting for the lockdown to officially get over and then they can relook at, the firing kind of situation. So I think a lot of salaried people and the companies who are, driven on these salaried people will face a lot of issues. And Bajaj Finance will be one of them. And the provisioning, because the company management is still, conservative, so the provisioning will be more aggressive as compared to others. So I see a lot of fundraising issues on the debt side for them right now, and I see an asset quality issue coming up in the next 6 to 9 months.
Okay. Well, asset quality issues coming for the next 6 to 9 months to consider that as well. IGL is at 481, 1% higher. Samit Chavan, quick thoughts here on IGL. It's looked fairly strong.
It looks good. In last couple of days already, stock has given good recovery and now it's on the verge of a breakout. So if it sustains above 482, 485 kind of zone, stock is likely to head towards 500, 500.
Okay, so do watch out if it sustains. Yesterday, I think Chandan Taparia gave a call on IGL as a buy call afresh. Samit Chavan bullish on that one as well. Do watch out for IGL. The derivatives data also might not be too discouraging. So that's the key. So, well, let's try and narrow it down then, because there's just so many stocks to watch out for. What are our experts believing are the top calls? So Aditya, I'll come to you first. Your top call for the day today. That one stock that you would bet on today on open. Very quickly.
My sense is it's going to go up by for a target of 910, 940 with a stop loss at 845 on the downside.
Stock? Which is this stock?
It's an LNT, Neeraj. For a target of 910, 940.
Okay. Samit Chavan, what about you? Your top call?
Yeah, I've already suggested Report and Tata Steel, but I would again go with the third stock, which is Bharat Forge, on the verge of a breakout. So Bharat Forge can be bought for a target of 305, 308. Stop would be around 280.
Okay, watch out for all of these names. Very interesting to monitor in the session today. And a bunch of these will start off well. The market's about to kickstart. Samit, take a moment to thank you for joining me today. Samit and Aditya, please stay on. We'll just take in quick opening thoughts from you post-market open. It'll be important to get your thoughts post that very, very crucial day today. If you can, just hang on for a minute. But market's about to kickstart trade. We'll have a start which is in the green for sure, 2% higher as the Nifty suggests. The question is, what could individual stocks do? Here's how the markets are starting off. Well, 2% higher, yes. Banks, IT, everything is in the green. So 2% apiece for the Nifty and the Sensex, 2.7% for the Nifty Bank, nearly 3% now for the Nifty Bank. That is really marching ahead. What is doing well? Tata Motors up about 10%. Vedanta, 5.5%. There's strength in ICICI Bank, 4.6%. Infosys 4.5%, Hindalco 4.3%, Bajaj Finance another 3% higher, Axis Bank 3% higher at 451, HDFC Bank above 1,000. So a bunch of these stocks doing well. What is not doing well? HUL has corrected 2215 and counting. This one continues to drag lower. Be mindful. This stock is not quite having the gusto even in a rising market. BPCL corrects about 358. So those are the couple of names that look slightly wobbly. Bharti Airtel not quite gaining as much as one would have thought. What about the broader end of the spectrum? That's the other key, right? I mean, what are companies at the large cap end of the market, mid cap end of the market doing? So The gainers at the large cap, mid cap space, Strides Pharma 12% higher, Tata Motors DVR 11%, Motherson Sumi 8.5%, Glenmark 7.5%, Cyient about 6%, Amansa Capital is checked in there, Viatech Vabag about 5%, Sadbhav Engineering 5%, Suven Life 5%. So good going for all of these names. What is not doing well? Well, precious little. I think the only one that comes out even out here is FMCG, HUL and Marico stand out. Divi's Lab and Colgate are the other ones which are locally slightly wobbly. So mind you guys, I think the trend in FMCG also is looking weak, and HUL has news of its own which might be impacting it as well. So you have to be mindful of that. Just lastly, a quick watch list that I've created of stocks that I think are active. I just want to quickly mark them before I take in opening thoughts from our experts. Bajaj Finance is there, up about 4%. Dixon Technologies are at the 3% higher. The India VIX continues to grind lower, by the way, keep that in mind. Motherson Sumi is up a whole 10%. Big move there on this one. Do watch out for this stock. Tata Motors continues to remain the big one, and I will watch out for UPL at 366 or 367. That is an interesting one to monitor. Okay, quick opening thoughts before I let you go, gentlemen, because I'm sure you have a day full of trade packed up. Samit Chauhan, quick opening thoughts. Anything that catches your eye?
No, I think as far as the Nifty is concerned, I will go with Nifty itself. I would wait for 30-40 points dip, so around the 9700, 9710 in spot. If Nifty comes, probably you can take a punt by going long on 9700 call option. So I would expect probably this expiry to pan out towards 9800 or maybe beyond 9800.
Okay, Aditya, thanks, Samit. Thanks so much for joining in. Leave you at that. Aditya Agrawal, your quick opening thoughts. Anything that catches your eye?
Clutch of stocks needed. One is Nestle India. It's looking good post opening. It's a decent opening, flat opening, not a gap up too much of a gap up opening. So traders can look to go long on Nestle India for a target of 18,000, 18,500 on the upside, with a stop loss at 17,400 on the downside. L&T, as indicated at the start of the session, should do well. It's up to 2.5%. That is also one stock which traders should look for. Definitely looks attractive at current levels and can test levels of 940, 950 on the upside. Coming to Nifty, it is holding on to its opening gains. Yeah, Neeraj.
Aditya, sorry, just a very quick thought on HUL because it started off weak.
So coming back to HUL, I will. It's taken support at the 50 DMA Neeraj right now. 2200 will act as a very important support. Probably I'll go long contra call with the stop loss at 2190 on the downside for a target of 2350 on the upside. There can be a short covering rally in HUL, I believe.
Okay, we will watch out. Thanks a lot for that, Aditya. So do watch out for HUL as well in the session today. The market looks strong, and that is the reason why HUL could be a bit of a contra rally according to Aditya. Let's wait and watch. Samir Kabra, your quick opening thoughts.
So I think we are at, almost at technically bounced completely on that retracement what people are expecting. But all I see globally as well, it's all driven by algos. So I really don't believe these levels will sustain when we reopen. So a lot of liquidity and reopening news is helping markets to come at these levels. So I would use these levels to get out of certain sectors which I see in pressure for next 6 to 9 months, given the liquidity infusion by the government will be limited to mainly the MSME and the agri end. So that's where I see it's a better time, especially to get out of the hospitality sectors, the airlines, all these heavy debt-driven companies, because a lot of them will face a hit on cash flows, and it's better to exit on these kind of bounces which come as a bear market rally or whatever you want to call it, because the participation on the fundamental end doesn't justify the valuations right now. So it's better to stay away from these companies and get out of them before you think about re-entering and let the fundamentals play out.
Okay, we'll leave it at that, Samir. Thanks much for taking the time out and being with us. All right, let's get in. One of my favorite market voices, really, Prateek Agrawal of ASK Johnson right now. Prateek, so good having you. Thanks so much for taking the time out.
Prateek, hi. Good to be there. Good morning.
Yeah, good morning. It's been a while that we've spoken, Prateek. How have you analyzed what's happened in this really remarkable pull back that we've had across the world and in India? And what are your thoughts now?
Yeah. So the there has been a damage to earnings for sure. And our sense is the markets overshot the damage on the downside, maybe on account of a severe selling pressure that we saw. And then there has been a pullback. Our sense is even after the pullback on valuations, we are still, at long period average on PE. But given the lower bond yields, we do believe the comfort in valuation continues. The way to look at it is there is a 1 year kind of a damage. Maybe in 2021 over 20, there would not be any earnings growth on the index. There may be a degrowth also. But then it's a 1 year damage. 22 could be a stronger growth versus what was anticipated earlier. That has to be recognized. And overall, if we believe that the assets are all there and they are good, then the market is pricing those assets extremely cheap. Our market cap to GDP is like 55, 56%. Just now versus on an average, it's been over 70%. So that kind of gives you one sense. So yes, PEs are important, earnings is important, but then, one should not be valuing assets below a particular point. So that is the sense that we have just now. There are tick boxes to look at. We are focusing on cash on book businesses. We are focusing on branded businesses which will benefit from commodity price softness, and we are focusing more on domestic businesses versus exports. Exports, there are exceptions for pharmaceuticals and chemicals. So, that in short is what we are doing.
Yeah, well, that's in short. Now let's try and elongate it as well a bit. Pharma, it's been the buzzword. There is a bit of a risk-on rally this week, which is why it's taken a bit of a backseat. But do you think that, I mean, in your assessment, have the long-term fundamentals for some of these pharma businesses changed?
So if a COVID kind of a situation is seen to be a recurring one, is there to stay, which I believe is the case, it's not going to go away, then, companies who are benefiting from the demand for their medicines, be it hydrochloroquine or remdesivir or, the other medicines which go into managing patients in the hospitals, all of that demand will be there every year. So to that extent, maybe, should not say it, but outlook improves, for pharmaceuticals. Second, what is also happening is, when there were too many people competing for, let's say, US markets, the approvals were difficult to come by. And in fact, they were knocking out many of the plants on one reason or the other. Once this crisis has erupted and they want the medicines over the last 10-15 days, we have seen, I would say, the highest concentration of approvals in recent memory. So export business definitely moves up. The riskiness attached to it goes down. But that said, if you look at the marketplace today, with the current understanding that people have, valuations are just about there. So, if pharmaceuticals are expected to do better, both valuations reflect that already, as in the consumer part. So that is the difficulty in the market. Maybe on financials, I do believe market has overdone the selling a bit more. But otherwise, as per current understanding, market is valuing each business where it should be.
Sorry, this was a view on pharma, or do you believe financials market is valuing each business as it should be?
No, so pharma and consumers, two of the better performing spaces just now. The damage to the stock price, if any, is in line with the damage to, let's say, FY21 earnings estimate. And hence I am saying the market is valuing it in line with the current understanding, maybe in some cases even higher than where the stocks were pre, let's say, March 1st. And if you look at these two spaces, these are the only spaces, and maybe, let's say, general insurance, where analysts may be looking for some growth in 21 over 20. Other spaces is a degrowth. Now, in the whole spectrum of the marketplace, financials is a space where I do still believe that there is still an overshoot on the negative side. So if the rally continues, maybe financials lead it at least to their normative values.
Okay. Prateek, we've had a number of our conversations on the non-lending financials in the past. These are very interesting business models. They've come under a bit of a cloud, at least the AMC stocks have. I want your view. One, start off with on the AMCs because they've seen some price damage, and then on insurance as well, because they have largely, I mean, some of them at least have recovered a large portion of the losses that they've incurred as well, the insurance plays.
Yeah, so this space is actually looking more attractive than before. General insurance actually comes out as a winner. There is no damage to the balance sheets, and the business outlook improves. In the immediate term, the motor claims would be lower because people are staying indoors. Yes, regulator has not given the premium increase this year, but I think in spite of that, that business would have lesser claims and hence profitability would be higher. Second, because of the times, the health insurance piece, which is a fast-growing piece, will grow probably faster and is very profitable. So that piece for general insurance companies could drive growth in future. So outlook for this business definitely improves. If we go to life insurance businesses, there is some damage to the balance sheet. Solvency ratios move down a tad, mainly because of crack in asset prices, debt and equity. But business outlook improves. People will want more of life insurance, maybe less of ULIPs, but more of life insurance, which again is a very high on profitability part of business. So overall, these two, the insurance space, I would say, in terms of business outlook, wins in this kind of a scenario. Mutual funds, we can categorize them into two. Funds which were perceived to be riskier on debt side for one reason or the others. Just like it is happening in banks where people are pulling out monies from perceived higher risk banks and moving them into perceived lower risk banks. Same thing is being experienced in mutual funds. People don't want to risk their monies in a debt kind of an asset class. If they sense any risk, they're pulling that out, putting it into funds where risk perception is lower. So, for the larger fund houses, I would say debt does contribute 30-35% of total profits. The house which is getting in a lot of flows could see that percentage move up significantly, given that equities are down today. That demarcation has to be made, one, and two, this is again a business where the balance sheets have not gotten impacted. Solid, very high ROE businesses. Business outlook in terms of flows has not gotten impacted. For whatever is my current understanding, there is a great chance that flows improve. once normalcy gets restored. Yes, there is a damage to equity values and AUMs have gone down. But then if we believe 22 earnings will be where 21 would have been otherwise, if not for this crisis, then theoretically speaking, the equity AUMs of funds could be back to where they were, let's say in a year kind of a time frame from now. And the damage to the stock price would then appear to be a good entry point. So, in short, the fee-based financials, overall, we are positive. Best position, of course, are general insurance guys.
Okay, so best position is insurance. Prateek, liking the asset management space as well, with a presumption that you have to see some pain for the near term. Maybe the medium term looks better, or well, actually, 3 years is not medium really. 3 is as near as it could be. Prateek, the other pocket that you mentioned is specialty chemicals, and what intrigues me is only this: when you look at these businesses right now, the promise of the business is there. The valuations on a near term, 1 year, 1.5 year, maybe, or compared to the past averages, doesn't look cheap. If it doesn't look rich, it doesn't certainly look cheap as well. So are you investing fresh money here? And if so, what's the thesis? Is it a multi-year CAGR growth story in some of these names? What's the thesis?
So that is the point I was making. The market is pricing each space according to the current understanding. So you are absolutely right. The valuation comfort, let's say in consumers, in specialty chemical, in pharmaceuticals is less there. It is probably not there except for the fact that interest rates may be lower and your discount rate may be lower. So it can sustain higher valuations. To our mind, if you have to go into chemicals today, it is to price in the option value of a strong shift away from, let's say, China. And we have seen some bit of that happen. So, one company has got 3 contracts from offshore guys who have at least for one of the contracts came and is promising to put in working capital, assuring a sizable ROEs as well, to develop a second source of products. Something similar happened to another specialty chemical company. So, this is a space where if you really want to move away from China, we probably are the only other country which can, scale up nicely, strongly, because in specialty chemicals and chemicals in general, the ecosystem is very important. You can't simply start from scratch. If your process makes chlorine, it can't be transported over long distances. There needs to be a user of chlorine, close by, and similarly of an asset, etc., etc. So, thing is that ecosystem needs to be there, and I think India has that, and hence we are very nicely positioned. So, if there is any substance in the thought that people will want to develop a second source, I think chemicals, specialty in particular, really stand out. I agree to your point on valuations. In terms of what we are doing, see, it is in some sense like asset allocation. In our portfolios, the weightage of these entities have moved up significantly. Consumer, specialty, etc., the good performing part of the market, relatively speaking, and as a part of rebalancing, we are taking some money out of that and putting it into other spaces which have not done as well. So that much we are doing, but we are keeping the faith. We are not getting out of any of these names.
Okay, one last question, Prateek, and that is this resurgence of sorts that we're seeing in global auto-related names. I mean, Tata Motors news today, Motherson gave an update, and in an interaction with us, Motherson said that they expect almost zero loss of sorts. I mean, unless I'm getting it wrong, but something like that. What are your thoughts here? Global facing auto names, auto ancillaries, I mean, the Mothersons, the Balkrishna tires, etc. of the world. What do you think that this pocket could be strong?
So versus earlier, the thought is that versus going in public transport, anybody who can afford it would want a personal transport in the post-COVID era. So one should expect to see, two-wheeler sales and car sales come back reasonably quickly. So that is one desire. The second thing one has to also see is how much are the incomes damaged and so on, and hence whether we will see continued demand for cars. As of now, I would believe we would, since it would become a necessity. So this is a space where, in terms of numbers, post this outlook improves. Okay, if we look at where stock prices are, we are getting some of these companies at stock prices which are 2014, 2015 prices. And if we look at productions, they are significantly higher than those years, with a good outlook now going forward. So in the auto chain, except for CVs, I think, cars look good, two-wheelers look better than before, tractors any which ways are looking good.
Okay. Okay, Prateek, one last question. What is the risk to this optimism? We are in a bit of a bullish scenario, but the reason I ask is because from 7,700, we are at 9,800. It's a remarkable pullback. And 2008 showed that these pullbacks can get sold into as well. I mean, what's the risk to this pullback?
So it's a very uncertain time. There are risks, and hence if you see what is doing well is the best quality part of the market, which is how we believe it will continue to be. Risk number one, we believe we are over the hump in many countries, and we are seeing markets celebrate that. But then, as is the case usually with viruses, after the first hump, there is a second larger hump. And if we see cases explode, the reaction of people would be very different. If we look at how we were behaving ourselves in this country in the month of January and February, and how we behaved in the month of March, I mean, that kind of gives you what to expect. January, February, we had like 2 cases in the country, and it was going as usual. In March, when the cases started to move up, people panicked. So that is one. Cases can balloon when the country opens up, and one should be prepared for that, and hence, put money to work judiciously over a period of time. Second, Q1 numbers will be terrible. April, nothing much has happened. May, probably nothing much will happen. And hence, Q1 numbers will be like nothing that we have seen over our investing lives. Yes, after that, Q2 should be very good because of some suppressed demand coming back into the market. But, it remains to be seen how the marketplace behaves when they see Q1 results. So, to my mind, these are the 2 biggest risks. Once we are over them, then the confidence in the marketplace will be more. Today, what we are seeing is that foreigners who sold like 58,000 crores in the month of March, have stabilized. They've stopped selling. Domestics, small buying, and the market has stabilized. One has to be conscious about the 2 risks coming up. While valuations are cheap, and we are also saying that use them, put some money to work, but keep some money for later. You have to allocate asset, you have to stagger it.
Sound advice, keep some money for later, and I think that's the headline for our story today from Prateek Agrawal. The Q1 numbers will be nothing like we have seen in our investing lives. Prateek, So good chatting with you. Always is. Thanks much for taking the time.
Thank you.
Well, and just before we wrap up, just want to mark a quick check. I mean, the markets are well doing very well for themselves. Do watch out. The likes of Ambuja Cements, Amara Raja, etc. are all okay. But the ones like Motherson Sumi, Tata Motors, those are the ones that are really surging in trade. Tech Mahindra ahead of the numbers is up about 3% odd. And frankly, if you just look at the large cap end of the market, save for Sun Pharma, everything in the green. And Tata Motors, Mahindra & Mahindra, Maruti Suzuki, Vedanta, Infosys, ICICI Bank, autos, banks, actually even IT and metals, global facing things are doing really well. Maybe that's where you could position your trades too. It's expiry day though. Be mindful of that. Thanks so much for tuning into this leg of Indian Open.
Beep.